Welcome, thanks for watching Divine TV 2. Please don't forget to like, share, and subscribe.
Severally by my friends, they've really been disturbing me. Geoffrey, come and teach me how to trade Forex. I want to be really successful at trading Forex. Now, if you have checked my previous videos, you know that I'll be talking about advanced things that only those who knows how to trade Forex would be able to relate with, like how to get $100,000, how to trade with prop firm like FTMO and all other prop firms we have in the world institution, how to trade like the bank. I'm talking about strategies. Now, what if you've never heard about the word Forex? Or probably you've heard about it maybe from radio, television, and no one actually has shed more light into it. Okay? Or maybe a friend of yours is super successful at it and it does not really have that easy to understand. Now, the major thing about Forex is consistency, and that and many other things I'm going to be teaching you as time goes on. Since you are here already and you're liking this content already, of course, I know that you do like them. Make sure you like our video, subscribe, turn on post notification. Now, if you like the video, you are helping the YouTube algorithm to spread this video to many others who also want to learn how to trade Forex in this year and even beyond. Please kindly help us to do that, and we'll really appreciate you. Thank you for subscribing and thank you for liking this video. Bless you. If you have visited any currency exchange booth, you probably have traded Forex. Now, if you have changed one country's currency for another, you have traded Forex. And if you have traveled from one country to another, from your country to another country, you have traded Forex. Now, what's Forex? Forex is very simple. Exchanging United States dollar to euro, that's Forex. Exchanging euro to AUD, Australian dollar, that's Forex. Exchanging New Zealand dollar, NZD, to AUD, that's Forex. That is Forex. It's super basic. Now, Forex is the simultaneous buying and selling of two currencies. And note, it must always involve two currency. That's for Forex. There are other instruments that you could as well trade now. I'm talking about Forex, okay? So when you are exchanging one currency to the other one, you just participated in the Forex market. Now, Forex is the biggest financial market in the world. It's 200 times bigger than the stock exchange put together. All right, it has liquidity of more than 6 trillion daily. 6 trillion, not billion, 6 trillion daily. Now imagine that. What if you are able to just take out $1,000 from this liquidity every day? All right, okay. First, as your learner, remove the dollar sign from the I. I'm just saying because I know that's what probably would be going on in your head. Now, the next thing that you want to also know that Forex market is a 24/5 industry. Now, as long as the banks are open in major countries in the sessions, like New York, we've got New York session, we've got London session, we've got Sydney session, we've got Tokyo session. As long as banks are open in any of these countries, Forex will always be rolling. That's why it is 24/5. There are more other things that which we are going to be learning as we progress in this course. I'm going to share my screen to explain what Forex is, to explain when to buy, where to buy, how should you participate, how much money is required for you to get started in trading this biggest financial market in the world, and how do you make profits and how do you make losses. I know most of you have also heard that there are a lot of losses that could be incurred while trading Forex. Yes, it is true that if it is not done rightly, you have to have the maximum psychology, have the maximum mindset to trade in this financial market. And trust me, it is super simple if you are able to control your emotions. What is Forex? Forex is the simultaneous buying and selling of two currencies. Whenever you travel to a different country, you always know that you have to change your country's currency or the country where you're coming from to a country where you're currently at. So at the process of doing that, you just involve in foreign exchange. How do they make money? Now, if you notice, if you go to any currency exchange booth, you are going to be asked two questions. Are you going to buy or you're going to sell? The reason why they are asking you this question is so that they are going to know the price to give to you, because the price that they are going to give to you when you are buying is different from the price they are going to give to you as you are going to sell. Because in any business, what you want to always do is buying low to sell high. That is the fundamental of all businesses. You want to buy low and you sell high. You want to buy cheap from the bigger market and you want to come to local market, to your suburb, and sell very high to make maximum gains. All right, so that's how Forex also operates. Okay, so now the exchange of one currency to the other, we have already been able to establish this fact, and this is the currency exchange currency booth. Now if you go there, there's always this column that shows the buy price and the sell price. So it is these changes in the exchange rates that allow you to make money in the foreign exchange market. If you notice, the price from the buy is different from the sell. So now the forex market is bigger than the stock market. Right here my slide shows that it is 5 trillion, more than 5 trillion traded daily, the liquidity daily. So you can see why New York Stock Exchange is just 22.4 billion, Tokyo Stock Exchange is 18.4 billion, while London Stock Exchange is 7.2 billion. It's more than, but Forex is ranging from 5 to 6 trillion dollars traded every day. So this is over 200 times bigger than the stock market. So you are aware that this is a very big thing. It is huge. All right. So Forex market opens 24 hours and in 5 days a week. It opens from Sunday evening 10 p.m. GMT and it closes Friday 10 p.m. GMT. So you are rest assured that you can trade at any given time of this hour. However, some sessions are more active than the other. What is traded in the Forex market? So simply put, money is what is traded in this Forex market. Now, is either you're trading one country's currency to the other one. Now, there are lots of currencies that you could trade in the Forex market, but the basic ones and the most common ones that you are going to see always are USD. You're going to see Euro. You're going to see GBP often too. You're also going to see CAD, which is CAD. You're also going to see CHF. We have AUD. That's 1, 2, 3, 4, 5, 6. We have AUD. We have NZD. That's 7. And we have JPY. We have got JPY. Now 1, 2, 3, 4, 5, 6, 7, 8. These are the 8. There are 8 major pairs that you could trade in the Forex market. The Forex major currencies. We have what is called the ISO. ISO stands for International Standardization Organization codes. Now, they are the body that formulates all of these codes. So we have EUR, which represents Euro. We have USD, which represents United States dollar. The most traded currency in the world is Euro USD. So we have it paired like this. You cannot see USD Euro. It is always paired like this because it was formulated by this body called International Standardization Organization. So we have EUR USD, and the countries that use this is Eurozone, which is European Union, and United States. USD is used by United States, and the nickname is Euro dollar. So you can see all of these names. We have USD JPY, we have GBP USD, we have USD CHF, we have USD CAD, we have AUD USD, we have NZD USD. So their nicknames are also aligned to your right. The Forex pair are in 3 letters. First 2 represent country's name, while the last letter is the country's currency. For example, USD. US stands for United States and D stands for the dollar. Another example you see there is GBP. GB stands for Great Britain, while P stands for pounds. Another example is CAD. CA stands for Canada and D stands for dollar, Canadian dollar. All right. So, and the exception to this is CHF. CHF, and F stands for franc, which is the name of the currency that they use in Switzerland, while CH stands for Confederatio Helvetica. So it is formed from the 2 major tribes from the Switzerland. All right. So that is why that's an exception. Why EUR stand for Euro, which is Eurozone. Okay, so that's that. You can also do all of that once you find out that that's how all these currencies are being formed. What is base and quote currency? We have 2 currencies. One is to the left and one is to the right. Now I told you cannot swap these earlier because it is formulated by International Standardization Organization. All right, so the one to the left always is your base currency, while the one to the right is your quote currency. When you are trading any currency pair, for example Euro USD, and you are buying that particular currency pair, what you're actually doing is you are saying that Euro is going to be strong as at that particular time and dollar is going to be weak. Whereas when you are selling Euro USD, you are saying Euro is going to be weak and dollar is going to be strong. These pairs are highly most traded in the forex market, and as a result, their spreads are low compared to others. Now, if you count that there are 7. This is 1, 2, 3, 4, 5, 6, and it's 7. So these are the most basic pairs that you should be trading as a beginner. If you notice in these major currency pairs, you find out that all of it are related with dollar. They either have dollar as their quote currency or they have it as their base currency. This is quotes, remember, this is base. This is base, this is quote, and this is quote. If it is to your right, it is quote currency. If it is to your left, it is base currency. Now, for this one, Euro USD, which is the base and which is the quote? This one. Of course, I know you got it right. So Euro is the base, while dollar is the quote. So you want to experiment with that and make sure you understand what base and quote currency is. Cross currency pairs, or crosses for short, these are currencies that does not contain the USD in their crosses. The most actively traded crosses are derived from the 3 major non-USD currencies. Euro and yen crosses. Now we have Euro CHF, we have Euro GBP, we have Euro CAD, we have Euro AUD, we have Euro NZD. Now, all you just have to do right here, you have to take the currencies that are mostly traded and you pair with each other. All right. So there you've got your crosses. Now we have yen crosses. Yen crosses we have here, we have Euro JPY, GBP JPY, CHF JPY, all of them against the JPY. You will always notice JPY is always found at your right hand side. It's always found at your quote. Now here are GBP crosses. GBP AUD, we have GBP CHF, GBP CAD CAD, GBP NZD. Now, GBP is used by Great Britain, AUD is used by Australia, CHF is used by Switzerland, CAD is used by Canada, NZD is used by New Zealand. And you can also see their nicknames right here. Now, GBP AUD is called Pound Aussie. So whenever I'm analyzing chart here on YouTube, I can actually say Pound Aussie. So I'm actually referring to GBP AUD. If I say Pound Loonie, I'm referring to GBP CAD. If I say Pound Kiwi, I'm referring to GBP NZD. If I say Pound Swissy, I'm referring to GBP CHF, and so on and so forth. Now, other crosses that you could have is AUD CHF, NZD CAD, NZD AUD NZD, CAD CHF. Now, apart from that, we have exotic pairs. These pairs are not as heavily traded as the major currencies or the crosses. So the spreads charged on these pairs are usually very huge. Now, example of these pairs are USD MXN, so United States Mexican Peso, USD ZAR, United States South Africa Rands, United States Singaporean Dollar, United States SEC, USD NOK, and so many other ones. The major participants are the interbanks. This is the major market, the pool where the exchanges happen. And it's also traded by the large commercial banks, the government and central banks. Governments also traded in this forex market, the speculators. Speculators are also participating in this forex market. It is worthy of note that forex market is traded for 2 reasons. Number 1, for profit reasons, and secondly, for non-profit reasons. Examples of people that participate in this forex market for non-profit reasons are the central banks. Central banks participate in the forex market for the sake of control. They want to be able to control their country's currency. Now, let me tell you, if the United States dollar is too low, it is a problem for the United States of America. So they want to pump in money to bring it higher. If it is too high, it is also a problem. So they want to bring in money to pump it low. So that's why market is always want to find itself in a state of equilibrium. The other market participant which I would like to mention is individuals. That is retail traders like me and you. It is worthy of note that retail traders only have 2 to 3% participation in the forex market. So what that sends to us is that we should always make sure we follow the big money movers like the banks, the central banks, the hedge funds, the speculators, and even the brokers. What is a forex broker? Forex broker is a financial service company that provides a platform for traders to buy and sell the financial currencies. So you would definitely need a broker while starting out as a retail trader. So in other words, brokers serve as a middleman between you and the interbanks. In case you don't know what the term interbanks means, interbanks are one of the market participants I mentioned earlier, and it is a term that refers to where a group of huge bank traders trade against themselves. There are 6 criteria that you have to put into consideration when selecting a good broker. Number 1 that you have to put into consideration is regulation and security. You want to make sure that you select a broker that is approved by a well-known regulatory body. You want to make sure that the broker that we are trading with has the best transaction cost in the Forex market, at least a fair one or a competitive one, like the spread and the commission. The third criteria we look at is deposit and withdrawal. We also want to make sure that our broker that we're currently using has a very fast deposit and has a lot of systems which you can use in depositing money, like Bitcoin, MasterCard, Visa card, every available Skrill and PayPal, all of those things. And we also have to make sure that the withdrawal process is very fast. Like some of them that I listed there can even deposit your money into your bank as fast as 3 hours. That is SNES. As fast as 3 hours into your bank account. The fourth criteria we look at is trading platform. We have to make sure that the broker that we're using supports the common trading platform, which is MetaTrader 4, MT4, MetaTrader 5, MT5, and CTrader, at least basic. The fifth criteria is execution. You want to make sure you're with a broker that executes super fast, like closing of trades and placing of trades. You have to be very fast. And the last thing is you have to make sure you are working with a broker that the customer service are responsive, they are respectful, and also they got your back. They can solve your problem at any time you go to them. So these are the 6 criteria that we've actually looked at before selecting all these brokers that we have there in our description box. All of these things are what we have considered before selecting all these brokers that we have. So we have IC Market, we have XNET, we have Ugosway, and we have Tradersway. All of those linked in the description box. You can use any one of them. Now note, IC Market do not accept residents from United States and Canada. So residents from United States and Canada are advised to use any other ones that are available down there. Forex market hour. We've got 4 types of sessions in the Forex market. Now we have London session, we have New York session, we have Sydney session, and we've got Tokyo session. London session is the busiest and the most highly volatile, followed by the New York, and Sydney and Tokyo come next. So now, for the day, this is calculated in GMT, all right? So the Forex market starts first with Sydney. Sydney opening first on Sunday, 10 p.m. in the evening. So Sydney starts this Forex market. So you can see, then immediately Tokyo joins as at 12 o'clock. All right. So Tokyo joins and Sydney stops at 6 o'clock in the morning while Tokyo is still in existence. From here, London opens at 8 a.m. in the morning because that is when London session, the banks open. Now, if you notice, if you trace this time to Sydney, it's going to be 8 a.m. Sydney time too. It's going to be 8 a.m. While this is also going to be 8 a.m. Tokyo time. So this is 8 a.m. London time in London. While in Eastern time, it's also going to be 8 a.m. because that's when the banks open. As long as the banks in each of these countries are open, Forex market will keep on rolling. That's why it is 24/5 all through the clock. So now, London session is the most busiest. Now, the time where they overlap, where they meet each other is what we call overlap session. Where they meet each other, where they both meet is what we call overlap session. Now, remember I said the biggest and the busiest is the London, followed by the New York. Now, what happens when the 2 big giants meet at the same time? There's going to be high volume, high volatility in the Forex market. When is the best time to trade? Now, the best time to trade is always within the London and the New York session. Now, the reason why I'm saying all of this is because of volume. You want to trade when the big boys are awake, when the huge banks are awake, to make sure that there's a lot of liquidity, a lot of volume in the Forex market so that you can play fast. Sydney session is always super slow, while Tokyo session is always slow. But when they meet at the same time, it is a lot faster. But whereas when it's the early hour of Sydney, it is always very, very slow. And the late hour, when the Sydney has also gone to sleep, Tokyo session, which is this session right here, 7 o'clock, markets are always very slow. But however, there is no specific time to trade. You can trade as long as any of these session is open. That is from Sunday in the evening to Friday in the evening. Here is a term that you will never stop hearing in the forex market: bulls and bear. Because these animal, I'm wondering why they have to use this animal. Maybe it's because of the mode of attack. Whenever a bull wants to attack, it drags with the horn. It drags drag the prey up with the horn, drags with the teeth and the claws down. So with bulls and bear, when we say bull, it simply means bullish, or it is going up. All right. If we mean bear, it simply means the stuff is coming down. It is bearish. So these are terms that you will always hear a lot in this forex market. Bull means long. If you heard a forex trader is saying long, it's actually saying buy, or bullish, or bull. So if someone say bearish, is synonymous to sell, and also synonymous to short. So these are the terms that is commonly used in this forex market. Here's a chart representing what we mean by bullish, long, and a buy market. This is a chart of Dow Jones showing that it's been going up, it's going up, it's going up. So in this such case, we are going to say this market is bullish. So this market is a buy market. Why a reverse example would be bear market. So whereas bearish, short, sell market, you can see this market is making consecutive lower lows, whereas the previous one is making consecutive higher highs. Bid and ask price. Remember I talked on bid and ask price earlier, talking about when you want to buy and when you want to sell. Now, ask price is always the line at the top, while bid price is the line at the bottom. So this price, you're always going to see it on your forex chart, always moving at the top. Now, if you want to buy, you are quoted at the ask price. If you want to sell, you are quoted at the bid price. So just know the two difference. What is spread? Now, if you notice, I didn't really talk much about what bid and ask price is. That's because I intend to talk more about it right here while I'm talking about spread. Now, spread is the difference between your bid and the ask price. Now, that small space you see between the bid and ask price is what we call spread. Spread is what your broker is going to charge you for placing any particular trade. You notice there's a distance between this purple line and this red line. This difference is what we call spread. Now, this is a chart on Bitcoin USD. Now, remember I said ask price is the one at this top and bid price is the one below. If you are going to sell, you are quoted on this one below, which is the bid price. If you are buying, you are quoted on your ask price, which is the one above. Here is a clearer picture how it's going to be on your MetaTrader for when you're about to execute any trade. See, again, ask line is the one at the top, the bid price is the one below. So the spread is the one, this gap in between them. It is always very, very small. It can be in very small pip. All right, now if you notice 1.13264 subtracted from 1.313252, the difference, if you do your math, is going to be 12 spread. That is 1 pip, 2 pipettes. Earlier, while I was discussing about spread, I made mention of pips and pipettes. Now, here I'm going to explain what pips and pipettes are. Now, the markets move in pips. Each step is calculated in terms of pips. Just as human being is moving, our movement is calculated in form of steps. Each step we make, so the forex market, each step the forex market make is calculated in form of pip. Now, pip is an acronym, and I want you to write the full meaning of pip in the comment section below. The fourth digit number after the decimal point is what is regarded as a pip. Now here is a pip. Now this is the decimal point. We are moving 4 places, 1, 2, 3, 4. So 7 is the pip. While 0 right here is the pipette. For example, I enter into AUD USD trade at 0.72170 and I exited at 0.71432. The simple thing that you are going to do in order for you to know the difference, how much pip I made in this example, is to subtract this 0.72170 subtracted from 0.71432. So the answer is going to be 0.00738. Now, you can divide your answer with 0.0001 since it's the fourth number to your right after the decimal, or you slide to your right 4 times just as we did right here. 1, 2, 3, 4. So 73.8 is our pip. Here is a graphical representation of what I just did. I entered a trade at 0.72170, right? And it kept on coming to the downside. I decided, I thought that, okay, it's enough. I want to take my profit, and I exited at this point. Now, if you calculate the difference between 0.72170 minus 0.71432, it's going to be 73. So that is how much pip I was able to accumulate in this trade. And the exception to that is yen pairs and gold pairs. They are exception. The second digit after the decimal is a pip in yen pairs, in JPY pairs. Now, for example, in GBP JPY, you notice that it is 3 whole numbers before you get to the decimal. Whereas as other cases, you can see it is always 1 whole number before you get to the decimal. For example, GBP USD, we have 1.292949. GBP JPY, you can see there are 3 whole numbers. Whereas all other ones are just the same. Anyone that has to do with JPY, USD JPY, you can see there are 3 whole numbers. Euro JPY, there are 3 whole numbers. NZD JPY, there are 2 whole numbers. So in this regard, the pip right here is going to be the second number after the decimal place. After the decimal. What is a pipette? Pipette are the last or 5th digit in other currency pairs except yen, whereas in yen it is 3rd digit. Now you have to pay no attention to pipette. Just as we have in time in wall clock in every home, we have in our analog wall clock, there's a very long one there in the middle and there's a very short one. So this is the hour, this is the minute, and this is the second. So pipette can be likened to the second. It moves very fast. So 10 pipettes gives 1 pip. So that is what pipette. So that's what pip is. So we don't really pay attention to pipette. All right. So you just, how many pip did you make today? You just tell them, oh, I make 100 pip, I make 1000 pip, I make 10 pip. All right. So we don't really make mention of pipette most of the time. What is a lot? Lot is simply the measure of volume. Now I talked about pip being the movement. Now, did you know that I could jump in on a trade and I'm going to make $1,000, the same trade at the same time, the same pair, and you also jump on the same trade at the same time, the same pair. We are doing the same thing. We are buying. I'm going to make $1,000. Another person is going to make $100, while the other person is going to make $10. Now, the difference right there is the lots. That is the volume. Now, you would agree with me, someone who is doing business with millions of dollars and someone who is doing business with hundreds of dollars, they are definitely not going to be making the same amount of money in return. And also, they are also not going to be making the same amount. They are not going to be taking the same risk and the same losses. All right? They are different. Now, what is a lot? Lot is simply the measure of volume. The volume, your buying capacity. That is what lot is. Now, we have standard lot size. We have mini lot size. We have micro lot size. Now, we are talking about standard lot size when you are buying 100,000 units of the base currency. For example, let's say you are trading Euro USD. You have to be, if you put it on standard lot, that simply means you are buying 100,000 units of base currency. That's a lot, right? So I'm going to be explaining how you can afford to do all of that in the next topic. But first, the lot size, to represent this, you are not going to see one standard. Just they are not going to write one standard on your MetaTrader 4. It is represented with numbers. Now, when you see on your chart 1.0, that's one standard lot. While mini is 0.1, that's as you can see here. It's represented with these numbers. So if I say 2.0, I'm using two standards. Mini start from 0.1, 0.1, 0.2, 0.3 up to 0.9. That's mini lot size. So if it moves up a little and turns to 1.0, then that becomes standard lot size. I believe you get that gist. Why micro lot size is 0.01. Very, very, very small micro lot size. And 0.01 to 0.09. For example, Euro USD. We are taking this example because Euro USD is the highly most traded pair in the world. Now, let's say one lot is equals 100,000 euro. Remember, I said if you are purchasing any currency, if you put one standard lot on any currency, you're actually saying you are buying 100,000 units of the base. So that is why we are saying 100,000 euros. So one lot is equals on Euro USD is equals 100,000 units of Euro USD. So let's say as at this time that we are buying, the ask price was 1.13222. So why make this one small is because this is a pipette. Why this is the pip. Now remember, you have to be relating with all what we have talked about so far. So good. Now to buy one lot, you have to time the 100,000 with this ask price. So you need $113,000. To buy 0.1 lots, which is one mini, you need $11,000. To buy one micro, you need $1,000. That's really, really outrageous. Even for you to buy this one small micro, you still need this amount of money. That is huge. Now, for each pip movement on one standard lot, you are going to be making $10 for each pip movement. For each pip movement on micro lots, you are going to be making $1. For each pip movement on mini lot, this is a mini lot, you're going to be making $1. On a micro lot, you're going to be making 10 cents on micro lot. So this is the difference. So you may want to use this, but also note that once it is going against you in terms of pip, you're also going to be losing $10. If it's going in your favor, you're also going to be making $10. You have to note all of these things. It's about risk and reward. That's how lot size work. Now you will ask, how do I get that amount of money to trade that huge lot? You notice for a small micro lot 0.01, you need nothing less than 1,000 USD in order for you to place trade. Now, does it mean if I don't have 1,000 USD, I cannot trade? All right, your broker has got you covered. Now, this will take us to the next topic. This is one of the services that your broker offer you. Now, remember earlier I said broker charges spread and they also charge commission. Now, what would justify that charges? This is one of the services that justify them charging you, which is leverage. Leverage is an amount of money that is being lent to you by your broker to do business. And once that contract or business is over, that trade is over, they are going to pull back their money. Now, you're not going to see it physically on your MetaTrader 4 on your trading app, but this is what they do in the back end. So now, this is how leverage works. Let's say, for example, you've got an account of $1,000 and you chose a leverage of 1 to 100. Now, before I start, you know that in Forex trading, you can have leverage of any amount. Whereas in United States, the recommended leverage that they require their citizens, always recommend for their citizens is 1 to 50. Now, the more the leverage, the more you are exposing your account. Leverage is a very good thing. Also, it can also hurt you. All right. So it depends on what you want to do with the account and the purpose why you're opening the account. Maybe you want to risk all the whole money at once. It just depends on you. Now, we have a leverage of 1 to 1, 1 to 10, any amount, 1 to up to 1 to 1,000. Some broker even offer unlimited. There are some crazy brokers which I'm going to be recommending to you. Now you can check the link in the description box to see the list of my recommended brokers, the brokers that you should use, brokers that even allow you to deposit up to a minimum of $10. For example, you are trading an account of these 0.1 lots. All right, so this, which simply means this is 1 mini lot size, right? So you need $11,000 to trade this market. You need 11,000 of the base currency to trade whatsoever currency. Now let's still use Euro USD as an example, the example that we've been using all the while, right? Now your broker is going to put down 99% of the amount of money that you need in purchasing this particular trade. That is what we call leverage. So 99%, which amount to 11,209 out of 11,322. So your money is just 1%, which you are putting down, which is 113, which is 113, in order for you to participate in this level of 1 mini lot size. So that is why you can even deposit $100 and you can place 1 mini lot size. You can place 0.01, which is 1 micro lot size, or any lot size that you please, based on the leverage that you've selected. The next forex jargon that we have to unveil is what is equity and margin. Firstly, I want to explain margin because it kind of relates to what we said earlier, leverage. Now remember, the amount of money that you put down, which is 113 that you put down earlier, is what we call margin. That's your 1% that you put in is what we call margin. It's very simple. Now, I'm not trying to give you definitions. I'm giving you a practical example of how it works. Now, just look at all of these things. It's super simple. Now, let's say you are trading a contract Euro USD, for example. All right, Euro USD, and you put in 1 mini lot size. And to buy this one, you need 11,322. Now, your broker is going to put that 99%. This is what we call leverage. We treated that earlier. While the 1% you put down is what we call margin. So this is solved. The next one, I'm going to explain equity with the help of this next example. Now, remember, just to recap, the borrowed fund, which is leverage, is 11,209. Your margin is locked down right here, and your account balance is $1,000. Okay? And let's say you come up with a trade. First, let me explain another principle which is going to help us. Free margin. So your equity is margin plus your free margin. So this is your free margin. Now, what is free margin? Amount of money that is left after when you subtract your margin from your actual balance. When you place a trade, your balance still remains $1,000, even though 113 has been deducted. It's not going to show that it's been deducted. It's still going to show $1,000. But at the back end, this is what is happening. It's going to be fluctuating on your MetaTrader 4 at the top right corner. So this is what I'm explaining. So your free margin is an amount of money that is left for you that you are left with for you to place more other trades, or the amount of money that is left for your trade to run. Okay, once it is moving up and down, if you're in profit, you're in loss, it will keep deducting and it will keep increasing based on the condition of the trades that you've placed. Now, equity is the summation of margin and free margin. So when you add 887 plus 113, that is your equity. Okay, it's going to give us $1,000. That's because nothing has moved here. No trade has been placed. So when you have not placed any trade, your balance and your equity, everything still remains intact. It's still all the same thing. Now, let's say we have placed a trade. Now, we hop on and trade Euro USD, and we are currently making a loss. And I'm just going to give this example and let us make a loss and deplete everything so that you are going to see how it actually works. Now, you are negative $200 on your account. So your free margin is going to reach 687. While your margin is static, is the amount of money that you're using to purchase. While your borrowed fund is still static, broker is giving you 99%. I believe you understand. So these two of them is equity, while free margin is just amount of money that is left for you to place more trades. So this will keep fluctuating as long as your trades are open. Same as equity. All right. So now let's keep on going, and you keep on losing this your trade. Now you're negative $400 on your account. What happened? Your free margin keeps reducing while everything still remains intact. What happened? You keep on losing negative $600, keep on losing Now, when all of this buffer is over, what happens? Your account is said to be blown. This is what we call account is blown. Now, the only money you're going to be left with is going to be your margin. So they are going to close this account. They are going to pull out this money. All right. Broker takes their money immediately. Broker is going to withdraw their 99%. Nothing happens to this money. So this margin returns back to your balance, becomes the balance that you now currently have. Now, there are times where there's a high volume in the Forex market, a high volatility, whereby your margin will be affected a little. Maybe, let's say you'll be able to have $100 left because the move was so high, very volatile, that they were unable to respect your stop order, or it was unable to close out when your money finished. All right, so once this money finishes, the next money you're going to enter is going to be your money. So they actually use this margin as a safety net to protect their own money that they are bringing in. Of course, they want to protect their money. This is a huge amount of money, right? So they wouldn't want to lose it. Next one example, let's say you are profitable. Now, here is an example of profits. Let's say you were profitable on the trade. You took on a trade and you were profitable. Now, you are positive 200. So it's going to be 200 plus what you currently have here. It's going to be 200 plus your free margin. All right. So it keeps increasing. And this dotted line right here is where you set your profit order at, and it hits your profit. Now, what is going to happen is going to hit take profits. When that happens, is the trade is going to be closed. Once the trade is closed, immediately the broker pulls back their 99% again. Your margin returns back to your balance, and the margin returns back to your balance, and your money, your take profit, the money that you make, $200 also returns. That is how the trade is going to be closed for that particular contract. That is how it works on the back end. All right, it is not this slow. Just remember, I'm only explaining so that you know what is happening at the back end. Take profit is an order that you set awaiting the market, that whenever price gets here, it should lock you out and it should hit you out in profit, and you are okay for that particular trade. Okay, let's say for example you hit on a buy Euro USD, you entered at this dotted line, and it keeps going up. Now, buy simply means you are expecting the market to rise. If you sell, you are expecting it to drop. So you said buy. So you keep buying, and once you hit this point, it's going to close your order automatically. Even if your phone is off, your laptop is off, any trading tool that you're using, even if it is off, it's going to close that automatically. So these orders are automatic. This is an example. Now, when this candle hits this line, it's going to close this order immediately and stop it and keep it for you in your balance, and your profit is waiting for you, and you're smiling. What is stop loss? Stop loss is super important. This allows you to stay in the business for so long and for you to control your risk. Now, the reason why I think Forex is less risky business is because of stop loss, because you can predetermine your risk even before you trade. Now, how does stop loss work? Stop loss is a pending order that you set awaiting that just in case this market did not go as planned, it should hit me out in this much loss. This is what I'm allowed to take. That is what stop loss is. It's very simple. Now, if you notice this trade, we entered on a buy at this dotted point. It was going on in profit. This blue represented profit. From here, started declining. It went past this our entry point, so it kept on coming down. As at the point it came below this our entry point, then we are already negative. It's red. So we said once it hits this line here, that's our stop loss. So it hit this line. Even when our devices are off, we are away from our laptop, it's gonna hit that line, stop loss. Then your loss is waiting for you on your MetaTrader 4 or your MetaTrader 5 or C-Trader, whatever platform you're using. So now the same thing also happened. This is for a sale example. Now we sold at this point, it kept on coming down. Once it's coming down, that's when we make profit for sale. So from here, it started reversing, started going up. So it hits, this is our entry point. So everything became neutral here. Then it went further, kept on going. Then we are right here. So once it hits this line, that's our stop order, and that's it for that trade. So here's a video on how to download the MetaTrader 4 app on your Android and also on your iPhone. All right, whichever one you're using, here are two examples for you. So the first thing where you're going to go to, you have to go to your App Store on your iPhone, while on your Android, you have to go to your Play Store. So if you notice on your iPhone, we have MetaTrader 4 at the top and we have MetaTrader 5. Any one of them you download is just fine. MetaTrader 5 is the latest one, while MetaTrader 4 is the old one. But whereas a lot of people still prefer MetaTrader 4 because it has lots of indicators that are more compatible. While on your Android, the same thing, just hit on download, then that should just be. So right now we want to open. I already have them on my phone, so that's why you can see open right there. So make sure you download and next you open. So opening it is going to bring you to somewhere around here. This is my chart. So my chart is actually very neat. That's because I already have them set. So if you want to set your chart on Android, the first thing you have to slide to this point and you come to settings on Android. Whereas on your iPhone, you have to go straight to settings, and on settings, you have to go to charts. On this chart, you press color. Here, you can set it up. While on Android, you would have to come to colors right here. So you can change this color. Right now, you can just screenshot and use the same pattern. That's if you want to have the same color of my chart. You can change the candle to whatever color that you want. That's how to change your chart, because your chart is going to be looking like very, very, very amateur, like green, and sometimes can even be line. So you have to change your chart to look this neat, to be plain, just be plain white. All right, so I assume we already have the same thing as mine. Now the next thing, I'll just walk you through the processes. This first one is quotes. This is where all your pairs are. The pairs that I've been talking about, this is where you have to add them up. So if there is no pair that there's some pair that you want to trade that is not there, just press this plus sign. On iOS, you press this plus sign, right? You go to FX majors, you add it up. Once you press this plus, it adds up automatically. It comes back here, so you can just select and look at it all through. You see them right there. While on Android, you press this plus sign at the top too. If there's any pair that you want to add, just click on it and you press add. Just tap on it. It goes straight directly to home, the ones I just pressed. All right, so we have simple mode on iPhone and we have advanced mode. Simple mode is not going to show you about spread or show you the spread that is involved, while advanced mode is going to show you the spread, going to show you the time, all of those things, give you more information on the low and high price. All right, the same thing on iOS, just long on iPhone, Android, just long hold any pair and you're going to click on simple mode to switch. Long hold on any pair to switch back. All right, so the next function at the bottom is the charts on iOS, and the next one for Android is your charts. So this is where you have to do your analysis. You can shrink at any time. You do your analysis right here, and you could also change your time frame. You see, we have 1 minute time frame, we have 15 minutes, M5, H1 for H1 hour, H for hour, D for daily, and week, W for weekly, while MN for monthly. So this is where you have to switch your time, and we have crosshair for you to calculate pips. So you can see it calculates pips, it tells you the pips, and also show you the time at the bottom right there. Okay, you also have this F summation. This is where you want to add your indicator. So all this indicator that I have here on my screen, this TDI, this is where I added all of that, which we are going to be talking on in different video. Then this is where you have to bring out your trend line. Let's say I want to add a trend line now. I want to connect something like this. This is trend line, so I can just drag and drop anything. If I want to delete the trend line, I'll long hold on it, something pops up, I click on delete. That's it. All right, so if I want to trade this pair now, GBP USD, this is what I'm currently on. You can see GBP USD is the pair that I have here at the top right there, showing there. Okay, if I want to trade this pair, I'll just click on trade. This is where I adjust everything. Now, what I've been explaining all the while is here we have to practicalize it. First on iOS, so you see, first it shows market execution. You see buy limit, sell limit, buy stop, sell stop. So any one of these one you're going to select. Let's say for example want to enter market execution, want it to be executed right now. This next column is where we select our lot size. Remember I said 1.0 represents 1 standard. All right, 2.0 is 2 standard. Let's say 10.0, that's huge, that's 10 standards. All right, so if we say 0.1, that's 1 mini. If we say 0.01, that's 1 micro. So you can use these numbers to adjust it very fast, or use this one to increase the micro and or decrease too very fast. All right, so this is where you set your stop loss order. You're going to put your stop loss here, the number of figure here, and you're also going to put your take profit here. So once you are done, either you press sell by market or you buy by market. So immediately your order is going to execute. So I cannot execute now because I don't want this trade to be placed. But however, the markets are closed because it's currently Saturday while I'm recording this whole thing. So that's that for iOS. So let's go straight to Android. So Android, you can just tap on your screen to change the time frame. So you can click on M15, it goes to 15 minutes, M30, any time frame you want to change. That's for Android. So if you want to bring in crosshair, you press this plus right here, or you can just press something at the top there. All right, so Android is more handy for me. I prefer when I just tap on the screen, everything just comes out once. So this is where I add my indicator, that summation sign, this stuff like F, the letter F, and why this plus, so why the shapes objectives is where I add my shapes. I can just press the plus and click on trend line, vertical, horizontal, anything I want to put in. So you may not know how I was able to add all this horizontal line. It was by going to my objective and adding all of those stuff. So now if I want to change time frame to in Android, I can just press this one and change the time frame, but there's no need. I already have it, everything right here. Okay, so I can also change the pair from here. So I can just click on this dollar sign. I'm on GBP USD. I want to change to Euro USD. It changes to Euro USD. It changes to any pair that you want it to change to. So let's go back to GBP USD. So now pressing this new order is if I want to place an order. So this first one is market execution 2. Okay, you see market execution, buy limit, sell limit, buy stop, sell stop. All of these things is still just the same thing. If you want to set a buy limit, you click it here. So you're going to put the price where you want it to trigger you. If you want to sell limit, you're going to put the price too. But now let's do example of market execution. The same thing also applies on your iOS. Market execution, this is where you also increase your lot. So 1.0 means 1 standard lot. 2.0 means 2 standard lot, like that. So 0.1 means 1 mini, up to 0.0. That's where mini stops. While we have 0.01, okay, which is 1 micro. Then if I want to increase it with micro, I'll just press this button right there, this button, this one. I hope you guys are seeing this one. So I'll just be increasing. So it stops at 0.09. That's micro stop at 0.09. So if you press it one more time, it's going to give you 1 mini. That's how it was. So this one underlined with red is stop loss point, while the one on the right hand side underlined with green is TP, because red always means losses in Forex and green or blue means profits. So once you are done, you are going to click on this sell button or you click on this buy button. So that is how it works. Even right here, you can still switch pair. Let's say you don't want to trade GBP USD, you want to move it to another pair without going back. You just switch pair with this dollar sign at this top. All right, so that's how that works. Then the next thing you're going to see is trade. So this is where you're going to see your current running trade. So on my iPhone, you're going to see that I have $90,052 in my balance, and equity is $90,052. That's because I do not have any trades currently running, and you can see margin. If I had placed trade now, you would have seen my margin, the amount in margin. The amount in margin is the amount of my 1%, which I'm dropping for the total contract that I'm currently purchasing. While free margin is what amount I have left to place more new trades. While margin level percentage is a percentage that calculates how much risk you are putting on, how much you are exposing. So it shouldn't go below 100%. That's just one secret. The same thing goes on my Android. So Android just display 3 things once there's no trade. So it shows balance, equity, and free margin. That's because there is no trade. History tells you what someone has made. See, on iPhone, it shows day, it shows week, so you can switch. It shows month, it shows cost. These are losses and profits, as you can customize it, everything that you want to. All right, so this is for the month, this is weekly, this is daily. Everything it shows you on iPhone. While on Android, you can see today, you can see last week, last month, and you can also set custom. You can set from so period to so period. It should show you the history of trades you have placed. So this is the news on Android. If you want to read the news, we don't really use this part. And this is if you want to join the MQL community, that is MT4 community, the developer of this app. If you want to join that community. Whereas on iPhone, you can just go to settings to get that. Getting that in settings, you press chat and message. That is where you do that. And for news, you see the news button at this side too. So you can just play around with all of that things. For you to add an account, you have to press on iOS, you have to press settings. All right, you click here and you press this plus sign. Pressing this plus sign, and you're going to log into an existing account. Log into an existing account. Your broker must have given you a server name which you are going to impute. Right now, you can see these are the list of brokers that I use. On Android, these three button and by the side, and click on. You're going to press the three button and click on your name right there. So you're going to press plus, log into an existing account. So you said finding broker. Your broker is going to give you a server name. For IC Market, IC Market can give you IC Market on your iPhone. Just type IC Market, or on your IC Market on your Android. Demo 01, Demo 02. If it's a live account, they're going to give you live 03, stuff like this. This is how you're going to see it. So you're going to click on whatsoever they give to you. Let's say, for example, they give you live 18 on live 18. So let me also select live 18 here too. So you're going to put in your login part. Your login is going to contain numbers. When you put in your login, you put in your password. You make sure you toggle on this save so that you don't have to be entering the password all the time. So once you are done, you click on sign in for both of them. Click sign in. So that is how it works. So it's going to bring you immediately. Once it's signed in, it's going to bring you to this screen right here. It's going to bring you here. While on Android, it's going to bring you. So that's how it works. So you can sign in multiple accounts. Let's say, for example, you open with 3 different brokers, maybe for different reasons. You want to trade one as a learning account, and you want to trade the other professionally, or maybe very conservatively. You can just open 3 accounts. Like you see right here, I have Who Goes Way, I have FTMO account. You see, I also have an account for my personal flipping from SNES. See, I have IC Market, all of that. Same thing also happens on my iPhone too. Same thing. So this is how you just switch from 2 accounts. What are the other types that we have in the forex market? We have market or instant execution. It is either called market execution or instant execution, or buy by market order. Anyone, they both mean the same thing. All right. So and we also have pending orders. Now, instant execution or market execution, as you may call it, is you want to join the market just as it is. The exact price where it is quoted, you want to join as at that price where the market is moving. Let's say, for example, Euro USD is currently trading at 1.32222. You said, okay, I want to join at this price. I want to buy at this price. You don't want to wait for anything to happen. You just jump in and you start buying. That is instant. You want to join instant at that current market price, CMP, current market price. These are abbreviations you're also going to be seeing as time goes on in the forex market. All right. So now the pending orders, you have to really pay attention to these pending orders. Now we have buy stop orders and sell stop orders. You can call them, generally are called stop orders. This one. So we have it in buy form, we have it in sell form. Also, we also have limit orders. We have buy limit and we have sell limit. So first, let's go to buy stop. Now, it is an order that is placed above price and price keeps going up. For example, let's say this market is moving and you are not sure, you don't want to enter here. You believe there are some certain criteria that price need to break out of this place for you to buy. I almost said resistance or support right there, but just remember that I have not taught you guys. As time goes, I'm going to teach you what that is. So it is an order that you set at the top, waiting that, okay, when price gets here, it should hit you and keep going up. That is a buy stop. What happens when price gets here, hits you and keep coming down? You'll be losing. This is a loss. All right. If it hits you here and it returns, keep going up, that is win. All right, that is buy stop. It's an order placed above price and price keeps going up. While sell stop, it is an order that is placed below price and price keeps going down. This is just exact opposite of what we explained. Now let's say price was coming from top and you don't want to enter right here. You believe, okay, once it's able to break here and get here, you believe price will still be coming down, right? So when price gets here, trigger your order and you still keep on going down. That is sell stop. What happens if it triggers your order and keeps going down? You are going to be in loss. But if it triggers your order and keep going to the downside, which sell, that is win trade. All right. So, but however, what happens when price did not get to this your order that you set and it reverse? You are not in the trade. not as long as your threshold is not crossed, you are not in that trade. That is an advantage of pending orders. Why buy limit? Buy limit is an order placed. This is a little bit technical. You have to really pay attention to this one a little. Now, buy limit is an order placed below price and price then goes up. For example, let's say price was coming from the top. All right, you believe that whenever price gets to a certain point at this level, that is going to go up. So you're going to place a buy limit here. So buy limit simply means that once you get here, buy. So you don't want to be on your phone screen monitoring every day. So when price gets here, it triggers this, it touches this point and it keeps going up. Then you'll be in profit. But what happens when price triggers here and it keeps going down? That's loss for you. So buy limit again is when price is coming from the up, okay, triggers you down here. You believe it's going to trigger here, it's going to get to this level and keep going up. So that's what is meant by order placed below price. It is placed below price. Price has not gotten there. We are expecting price to get there, and price then get there and start going up. That's buy limit. So opposite of it is what we call sell limit. Now is the orders placed above price. So order is coming, price is coming from the bottom. You place an order here that whenever price gets here, it should trigger you and start dropping. That is what sell limit is. So what happens once it trigger you and keep going up? You will be losing. So you have to hit you and sell. You have to hit this threshold and sell. That is sell limit. I believe that is clear enough. You have made it this far. I congratulate you. So now this is like the intermediate section which we are about to head into, which is how do you know when to buy or when to sell in the Forex market? This will now lead me to the next topic, which is what are the types of Forex analysis that we have in the Forex market? There are three major types of Forex analysis that we have in the Forex market. Number one is fundamental analysis. The second one is technical analysis. And the third one is sentimental analysis. So fundamental analysis is pretty straightforward. It has to do with economic news. Fundamental analysis. You have to talk about the information, the political news, the socio-economic news, how it affects the country's economy. For example, let's say United States is having election. If they are having election, it's going to affect that country's currency, either positively or negatively. So it is the study and the analysis of how the news, economic event is going to move the particular country's currency. That is what fundamental analysis has to do. So fundamental analysis doesn't have to disturb itself with chart analysis. So it just has to do with you being able to predict how the news release whenever there is a meeting, important meeting like NFP, non-farm payroll, important meeting, maybe the European Union meeting or the Brexit deal, how it's going to turn out to. So that is fundamental analysis. Now, technical analysts believe that whatsoever happened in your left-hand side will probably happen later in your right-hand side. That is technical analysis. They believe everything is technical. Anything that happens in the Forex market has an history. Okay, so this is what is right here. So most traders are technical analysts. Like me, I'm a technical analyst. So I'm going to be teaching you more about technical analysis. Is how to use your trend line or how to use indicators, how to use any tool, Fibonacci, RSI, relative strength index, all tools to determine where price will likely go to in the near term. For example, with the help of technical analysis, you know that this price is going up. It came down, hit this trend line again, came down, and it broke out at this point. So you have to buy at this point. That is how for a technical analysis work. They don't concern themselves with what is happening in the country's economy, how their news is panning out, how their election is. They just believe that chart has all the story and they follow the chart, the price as it moves. So that is all about technical analysis. Why sentimental analysis are analysis that is being done based on how the big boys are trading, the major movers, the central banks. For example, let's say you have a news release in your country that your central bank just pumped in some money in order to stabilize your country's currency. So what will you do? That will make you to position and wait and go with the flow of the bank. So let's say, for example, the USD was too high, so the central bank in America pumped in some money to make sure to bring it down. So what will you do? You want to sell the dollar. So that is sentimental analysis. So sentimental analysis most times are found on social media, where you hear people's opinion, social media, on televisions, on radio, on CNBC, what the experts are doing, what they're actually speculating on. Okay, like we all know how Bitcoin skyrocketed because some guru said they're actually long on Bitcoin. All right, so that is just sentimental analysis. For me, I believe sentimental analysis should not be left. It's not a left alone analysis. It should be dependent on either fundamental or technical analysis. All right. So which type of this forex analysis is the best? So that is the question you probably want to ask. Anyone that works best for anyone that make the buck for you, that is the best. Anyone that make you the money is the best. So you can be a fundamental analyst, it is fine. If you can be a technical analyst, it is fine. But I'm just telling you, most retail traders are technical analysts. That does not mean you should become a technical analyst. You have to discover and also choose your niche. The one that works best with your personality is what you should go with. All right, but I personally am a technical analyst. I would like to congratulate you, and also I want to encourage you to make sure you join our Telegram channel. That's where traders meet with one another. So we have lots of traders from all over the world. There you can connect with traders, ask your questions, and make sure that you don't spam to avoid being banned from the group. All right, and another thing I also want to let you know is always make sure you keep learning. We are students, always keep learning. There are a lot of resources in that our Telegram channel. As at the time of making this video, the Telegram channel, we have about 2,200 members in the channel, while in the discussion group we have 1,900 plus members right there. So there are a lot of files talking about indicators, talking about PDFs that you could read from, gain lots of knowledge. There are a lot of people posting charts every day, and I also send my personal trades. All are for free. We just want you all to connect and to learn Forex the right way. All right, and this is the first part. I'm going to be working on the next one. By next week, I should drop the next one, whereas we'll be going more deeper and talking about more advanced things in the financial market. So the goal is to make sure you all that are watching me right now become successful in trading Forex, and also to the point that you'll be able to trade for prop firms, trade for industries, and so on and so forth.